We welcome the winter solstice in today. Of course, we're going to have the longest night and the shortest day here today. But of course, just in time for Christmas. How exciting. We actually got a little bit of a snowstorm here in the Rocky Mountain West. So hopefully you're doing well wherever you're at. Today in the Market Outlook video, we're going to take a peek at a couple of sectors that are heading in different directions. One, we've got energy stocks really booming to the upside. On the other hand, some interest rate sensitive areas of the market like utilities and REITs really struggling with rising rates here recently. Also, got a surprise for you at the end of today's video. We do have the big reveal as far as what David and I's company name is going to be, so make sure you stay tuned to that as well. Before we get there, keep in mind that you can subscribe to our YouTube channel here by clicking the red button that you see there on YouTube. While you're there, may as well give us a thumbs up if you appreciate these videos as well. When you get done with that, we'd appreciate hearing from you in the comments area as well. You guys have been great about that. If you don't know what to put in the comments area, put whatever your favorite Christmas movie is this time, just to get engaged, just to get that started here for the first time going and doing something in YouTube. Also, follow us on Twitter. You can find me in particular at Brandon Van Z, all one word. And remember, that is my somewhat new Twitter handle. It is different than the old work one that I used to have. So for those of you that used to follow me there, make sure you are now following me at my new handle going forward. And then lastly, join our Facebook group that you can see the web address of, hopefully on the screen there in front of you. We got over 700 like-minded investors and traders that love talking about the markets there in that group, and we'd love to have you there as well. So let's go ahead and get started here. Today is December 21st, 2017. I'm your host, Brandon Van Z. All right, well, let's take a look at the markets here today. We've got the S&P 500 pulled up in front of us, and as you can see, the S&P 500 was up about 5 points, good for 0.2% advance. After a couple of down days, we've got a little bit of a reprieve there. Keep in mind, we are heading into the end of the year with a possible 12 for 12 monthly up streak still intact at this point. And as a reminder, that has never happened for the S&P 500 before, for it to have every single one of the months of the calendar year up. So things are still looking pretty strong from that perspective. And as a reminder, we shouldn't expect these types of markets every single year, but we sure are thankful when we get them. As you can see right here, that candle was a little bit less than desired there, the way that it closed. You can see that we closed near the low of the range here today, have that high upper shadow there on the S&P 500. So we did have a little bit of selling coming in there at the end of the day. But as you can see from the background color of my chart here, it is still green. That signifies on this particular setup that the S&P 500 remains bullish according to the market forecast intermediate term line. All right, let's take a look here at our next set of charts, and you can see this is going to be my 4 grid. Now, as a reminder, when we're looking at this particular chart setup, we've got the 4 different indices in the United States, the major ones at least. We've got the S&P 500 in the upper left. We've got the Dow Jones Industrial Average in the upper right. We've got the NASDAQ in the lower left and the Russell 2000 in the lower right. Now, again, you can see that all 4 of these charts have a green colored background. That signifies that we indeed do have bullish postures using the intermediate term line on the market forecast on all 4 of these. So again, this is a bullish time of year, whole Santa Claus rally and all that jazz. Of course, we've got the holidays coming up right around the corner here, but it sure is good to see stabilization here across the board in at least the United States markets. We'll take a look at the foreign markets here after a bit. The other thing I'll point out about this particular charting setup is that you will notice that the moving average lines here can change colors as well. Now, in this particular chart setup, we do have a 30-period moving average. In this case, it's a 30-day moving average because each one of these charts represents 3 months in length, and 1 candle equals 1 day in this case. So we've got a 30-day moving average here, and if that 30-day moving average is pointing up, which many would construe as a bullish signal, then the moving average color itself will be green. And so that's yet another bullish thing that's taking place here today. We've got green moving averages across the board. The other thing that I'll point out is that we've been kind of talking about the Russell 2000 here a little bit more recently. In fact, the last time I did the market forecast video, I believe it was on the 13th, we were talking about how the Russell 2000 oftentimes towards the end of the year and the first part of January oftentimes outperforms the major markets themselves. So we'll see if that starts taking place here yet again. Right now, it's looking somewhat promising. As we look at the different indices here today, notice the Russell 2000 was up nearly 0.5% here today, up 0.46%, whereas the Dow was only up 0.2%, mentioned the S&P 500 only up 0.2%, and then the NASDAQ was basically flat. It was up 0.06% there. So right now it appears that the Russell 2000 starting to look a little bit more interesting here, almost a little bit of a cup and handle shaped pattern here that's about ready to break out to the upside if we can get past this previous high water mark of 1559 on the Russell. All right, let's go ahead and take a look at our next charting setup. And this particular chart setup here is going to be our 3 green arrows setup. Now again, we're going to look at the same 4 major US indices here, but the background color chart in this particular case means something a little bit different. Now it doesn't matter, you can see all 4 of them are once again green, but in this case what that signifies is that all 4 of our market indices here do have what's known as 3 green arrows, or different technical indicators that are showing signs of bullishness that include the 30-period moving average, the MACD, and the stochastic. So that's yet another bullish sign here for the U.S. markets. Moving on now to our next chart setup. This one's going to be a little bit different because of the length of the chart. All the other charts we've been looking up at this point have been 3 months in length. This one's 3 years in length here. Again, it's the same 4 major indices here, but the idea here is to try to gauge what's happening from a longer term perspective. What we're using here is what's known as a 1040 crossover method. And in this particular chart, when we're looking at a 3-year chart, each one of the candles represents 1 week in length. So when we're looking at something like a 1040 crossover method, we're talking about a 10-week moving average crossing up and over a 40-week moving average. In this particular case, you can see that all 4 of our major indices had their bullish crossovers that took place way back in 2016. So we've gone an entire calendar year and more at this point since we've had those bullish signals there. So again, a reminder that most folks probably aren't going to trade using this particular setup. This is more for your long-term, kind of more investing type of money, because you're just not going to get a lot of signals. Again, case in point, we haven't had one signal in the entire last year, which has been a good thing. If you've been on the right side of the market, meaning bullish, you've enjoyed kind of a gravy train run that we've seen in 2017. All right, let's go ahead and take a peek now at our 12 grids. Now for this particular set of 12 grids, this is going to be your 11 sectors that make up the market here in the United States. In the upper left, we have the S&P 500 chart, and then all the 11 other charts that follow it are those 11 sectors. Most of them come from the Select Sector Spiders fund family, except for telecom. Telecom's kind of your odd man out there, just simply because there's only a handful of telecom stocks in the S&P 500 these days. And as I mentioned last time on the video, that sector will be going through a bit of a renaissance of sorts coming up in 2018, the latter part of 2018. There's going to be a major shakeup where several big tech players are going to be moving to the telecom sector itself. So stay tuned on that. But for the time being, that's what we're looking at. Now, when we're looking at these particular charts here, this is flipping back to the market forecast mindset, where if you see a green background chart, that means that using the intermediate line on the market forecast tool, we would suggest that it is bullish here currently. If you see a pink background chart, that suggests that according to the market forecast intermediate term line, that there is bearishness right now. And as you can see, there are a couple of instances of that. Now, when we look in the lower right-hand corner here, we can see that utilities and real estate side by side, both in the pink. Now, for those of you that have been around the markets long enough, your first reaction to that little bit of knowledge there should be, simply interest rate sensitivity. Obviously, when interest rates are going up, we find that utilities and REITs and other bond-like equivalents struggle on a relative basis. There's also some one-off events that are taking place within the utility space. I did see that there was a company out in California, PCG, I believe, is the ticker symbol, that had to suspend their dividend because of the wildfires in California. And that kind of spread over to a couple of the other players that were down in sympathy of that here today as well. So it's not only an interest rate sensitive thing, but now we've got some concerns about some of the dividends in that area there. So as we look at the rest of the charts that are holding up reasonably well with the green backgrounds, I would say that the one that really catches my eye more than the others is energy. Right over here. I know David's been talking to you about energy quite a bit here recently, but you can see that we've had 1, 2, 3, 4 candles to the upside after bouncing off that moving average. Now, as a reminder, if you ever have your grid chart set up like this and you want to examine the price data in a little bit more detail, remember you can right click on any of the miniature charts like I've done just now and go down to maximize sell and choose that. Now, when I've done that, it kind of blows up that chart. So here we're looking at that 3-month daily candle chart of XLE. This is energy. So these are your big players like Chevron, which I believe was the stock that was up the most on the Dow today. So you got Chevron and Exxon and Conoco and Phillips 66 and all those players there. But you can see, again, 1, 2, 3, 4 to the upside here. Not only that, but today was the biggest of those 4. Usually it works the other way. You kind of have a big surge in the beginning of the run and then it starts to peter out a little bit. Well, this one's kind of the opposite. It's just building that momentum right now. Now, we will be on the lookout if things get a little bit overheated. Remember, you can only go up so far before you've got to do this whole breathe in, breathe out routine. And you can see right over here that I've got this red dot on my chart right down here in the lower area, and it also corresponds with this red dot up here in the upper price data area. What that signifies is that according to the market forecast indicator, we had what was known as an overbought cluster. Now, what you might expect to happen is for that particular chart that exhibits that overbought cluster to start struggling to some degree. It doesn't have to mean an outright reversal. Sometimes it just goes flat, but it is a little bit of a warning sign that's worth paying attention to. You can see in this particular case, it really did pan out the way that you might assume. We kind of topped out on this candle and we really started to fall apart here for the coming couple of weeks. So we're not there yet. I don't want to alarm anyone, but we're getting closer. You can see down below the green, the red lines are just knocking on the underside of the door there of that 80 horizontal line that it would need to break through in order to join that blue near-term line in the upper reversal zone. And if that were all to happen on the same day, then we would get one of those overbought clusters. So right now we're good to go, but if we continue with this surge that we've seen out of the energy stocks in recent days, that could very well be on the horizon. So let's go ahead and take a look at our next set of 12 grids. And let's see here. This will take us to the foreign markets. And so we've been very fortunate here in the United States with very robust financial markets here for the last couple of years. But remember, money ebbs and flows across the globe, and there will be plenty of times where the U.S. struggles on a relative basis, and we find that there are better places to be parking our money overseas. Right now, I wouldn't say that's necessarily the case. You know, we look at this 12 grid setup here for the foreign markets, and you can see that it's kind of it's split down the middle regarding whether it's bullish or bearish. It looks like we've got about 5 green charts here that would represent bullish intermediate term postures. And on the other hand, we do have 7 that are in the pink. And that means that we've got some bearishness according to the market forecast intermediate term line. So the one that I wanted to point out here, I know if Emil is listening, he's paying full attention to this. I heard from him after that. But when I did the market forecast the last time, the chart in the lower right-hand corner, I'm kind of circling it with my mouse right now. This is South Africa. And when I did the market forecast last, it was on December 13th, and it would be this candle that I'm kind of pointing at right here. I mentioned the Cahold during that presentation. Well, that thing has just ripped higher here, as you can see. Now, part of the reason that I was somewhat interested in that is because I'd seen a little bit of a resurgence in the material stocks. And by the way, you guys will recall that the trade that we took during that particular presentation was that trade on Rio Tinto, that swing trade. And happy to report that we're already out of that. We hit our target, we took our win, and we took our ball and we went away from the playground, so to speak. So we were out within about a week or so. So I was happy to see that one play out. But admittedly, the reason that South Africa went up wasn't necessarily because the materials were strong, which was what my original thesis was. I didn't realize they were going through their election period over there. And so we've really seen the market benefit in South Africa by kind of a regime change that's taking place over there. So keep your eye on EZA. That is your South African ETF. Other than that, we don't see a whole lot of strength out there. In fact, like I mentioned before, we've got more pink charts here. So I guess if you're looking for bearish setups, maybe you can look at a couple of those. Let's now take a look at our 12 grid for the intermarket analysis. So this particular chart setup here is going to look at things that are not common stocks. So we're looking at things like volatility in the upper left right there. You can see the VIX is stuck below 10. It'll be interesting if we close below 10 on this calendar year. Of course, 2017 represents the year with the most amount of daily closes below 10 on the VIX in history. So we are living in an ultra low volatility environment right now. So again, that's a reminder for those of you that might have just started trading and investing in the last year or two. These are not normal times at all. These are historically lack of volatility time periods that we're living in right now. So things will get more hectic in the future. I can almost assure you of that. So as we look at some of these charts, again, the idea would be if we struggle finding trade setups in the equity markets, maybe there's some areas in commodities or interest rates or bonds or what have you that could catch our eye more. But again, I would say similar comments to what I had with the foreign markets. Not a whole lot here to get excited about. You know, we do have interest rates surging here. So that's your chart second to left on the top there. So if I right click on that, I go to maximize sell, you can see here that interest rates really surging here over the last 4 or 5 days. And so that has, of course, pressured those utilities and those REITs and has somewhat given a little bit of bounce to some of those financial names. Big banks of the world usually benefit if interest rates are going up. So you've got the interest rates that are perking up a little bit there, and then you've got crude oil down below here in the lower right that is somewhat interesting as well. So that leads us now to our trade setup application example that I wanted to discuss here today. So let me come back over here and take a peek at chart 6A, which will just be a regular market forecast chart here. And the stock that I wanted to bring up was Amgen. And you'll remember that all of our sectors here in the United States right now have bullish postures according to the market forecast, except for utilities and real estate. So healthcare is strong enough to at least have a bullish posture according to the market forecast. Most of you are aware of Amgen. I would consider it kind of the granddaddy of all of the biotech stocks in our market here currently. And so Amgen has caught my eye recently, because I'm a dividend investor. Many of you know that. And while Amgen doesn't have as illustrious of a history of raising dividends the way that, say, a Johnson & Johnson might have, it's done a fine job of trying to play catch up. If we take a look at, let me just pop in a quick chart here, and I want to show you just visually what has happened with Amgen's dividend here in the last, let's call it 6-7 years or so. You can see that back here in October of 2011, somewhere in that time period was when they initiated their very first dividend. They didn't pay a dividend before then. Many of you are aware that biotech is kind of a make or break type of an industry. So it's an industry that struggles to produce enough cash flow to support investors with dividends over the long term. So it really takes that grandfatherly type, like I mentioned before, Amgen to be able to pull that off. Most other biotech companies are burning through cash trying to develop the next super drug. Well, Amgen, they're reaching the mature phase of their corporate history, and they're willing to now share their profits with their shareholders. And we can see when they started paying that dividend back here in 2011, it was paying about 28 cents per quarter. Now, you can see that every single year since then, they've raised that dividend. They've gone from 28-cent dividend to 36-cent quarterly to 47-cent quarterly to 61-cent quarterly to 79-cent quarterly to $1 quarterly to $1.15 quarterly. And that brings us to where we're at right now. You guys can barely see this, so I'll read this out here to you. But they just announced recently that they raised their dividend to $1.32. So again, put that in context. Back here in 2011, they were paying 28 cents per quarter. They're now paying $1.32, a full dollar per share more than where they were initiating their dividend back in the day. Now, just because a company's paying $1 plus dividend doesn't necessarily mean it has to have a high yield, but in the case of Amgen, it actually does have a high yield. It is yielding 3% right now. That is very rare for a biotech company to be yielding that type of robust number. You'll also find that its payout ratio is quite modest right now, meaning that the amount of earnings it makes, just to give you one example, you can kind of see down below here on our paper money charts that their last earnings was $3.27 in the last quarter. I know that's hard for you guys to read. That's really small. But again, just to reiterate one more time, it was $3.27. So if they're paying out $1.32 and they're making $3.27, and you can expect those quarterly earnings to come in at around those levels in the future, you've got a payout ratio of less than 50% right now. So in an era where markets seem to be hitting new records every single day, that's usually the enemy of the long-term dividend growth investor that's looking to put money to work. Of course, if you've already put your money to work, you're happy as all get out about that. But if you've got some funds laying around thinking you missed the boat, it can be hard to find true value in the market in one that's been as robust as this. And so I think Amgen represents a very unique situation for those of you that are looking to put a little bit of money to work in a dividend-oriented company that's shown some good credibility towards investors over the years, raising those dividends at very, very healthy amounts, and now supports a very robust 3% yield as well. So what I thought we would do here today for our trade setup is what's known as selling a put, selling either a naked put, or you could say selling a cash covered put. The point being, you can sell an options contract that says you're willing to take the risk off of somebody else. Remember, every time you sell a put, somebody else is buying that put. Somebody might be buying the put because maybe they own Amgen and they are buying a put in order to hedge their position. So they're basically buying an insurance policy. Well, who's the insurance company that's selling it to them? That could be you in this particular case. And a lot of times what we look to do is go out, let's call it about 30 days until expiration when we're selling these puts. And we generally are searching for a delta, let's call it between 30 and 40. And so you can see I've got the Amgen January 2018 contracts pulled up in front of us here. Now these are the contracts that expire in 29 days. And you can see our delta column right here is showing us the various deltas. And there's a delta that's right at 30, and there's a delta that's at 41. Now, just a rough back of the envelope calculation that I try to accomplish when going out here and looking at these types of trade setups is looking for at least 1% of the strike price. So let's just take a peek here at this 30 delta. Notice that the strike price on that one is $172.50. If we wanted at least 1% of that, it's saying that we would want to get at least $1.72 in order to be comfortable with that back of the envelope calculation that I mentioned before of 1%. Now, if you went with the 41 delta, you have no problem there at all because your credit's going to be a minimum $2.28. So when you're deciding between the two, it really depends on how aggressive do you want to be with the trade setup. Obviously, if you're more comfortable with the trade setup, you can get more credit by selling the 175 put. On the other hand, if you're not quite convinced and think, hey, maybe we've got some rocky periods in front of us here in the next 29 days, then maybe you seek that safety. You go a little bit further out of the money and you accept a little bit less credit up front. And I think that's what I'm going to do in this particular case. I'm going to sell the 172.50 put, but I am going to put it in a limit order of $1.73, let's call it, to get that 1%. So I'm going to click on the bid price here that says 160 right now. Now remember, this is after hours here on Thursday, but I'm going to click on that, and that brings up our order down below. And I'm going to change this from $1.60 to $1.73, and that'll just be a hair over 1% of our strike price in that particular case. I'm only going to do one contract here because remember, the idea would be you would need to be responsible for buying 100 shares of Amgen at $172 if you are put this security in the future. Now, if that's going to be the case, keep in mind that your yield will be well over 3% because the stock would have to fall $4 more in order for you to be put this at expiration. So that would be an appealing aspect of it for those of you that are considering yourself income oriented. And I am going to actually change this to good till cancel as well. Of course, I haven't been doing these videos quite as regularly here lately with David doing most of them. And by the way, I'm going to be kind of out of the pocket between Christmas and New Year's as well, so you won't hear much from me during that time period. But once January hits, I will plan on doing these videos a little bit more regularly alongside David as well. So right now we're going to put in that January 172.50 put. We're going to sell that for $1.73 or more, good till cancel. Let's go ahead and confirm and send. Look at it one last time. Everything looks great there. Let's go ahead and send in that paper trade. All right, now before we shut things down for the day, as promised, we now have a company name to reveal to you. Many of you have been following the journey that David and I have been going on the last couple of months here, and we are extremely excited to kind of get one foot in front of the other. There's a lot of things going on, obviously, with starting a brand new business. But one of the most important things is, what is that business going to be called? And we finally have a name for you. So without further ado, let's go ahead and reveal that for you. It is, ta-da, Market Scholars. So we hope you enjoy the name as much as we do, and we of course hope that you become part of the Market Scholars community in the future as well. Now obviously we're still in the very early innings of our business at this point. We're still building it out. Want to be clear that this website that you see in front of you, www.marketscholars.com, is just a very rough start to things here that we were able to kind of put together ourselves. We are hiring out professionals to build our actual site once we get up and running with our full-fledged education and online classes and all of that stuff. But for now, at least you guys know we're serious when we say we're starting a business. We actually have a website now. We have a name. We have a logo. And by the way, that logo right there, you can see that's a pencil, in case you couldn't see that right off the bat there. But of course, it features some stock market types of points in it as well. Those of you that are familiar with my stair-step charts for dividend investing, you can see that is kind of represented by that orange line on the top there. Of course, we've got some bar charts there for those stock investors in the crowd. We've got a little bit of a double top for those of you that are technical analysts there. And all things considered, we're very pleased to be able to present this to you here as an early Christmas present, per se, to let you know that we are still heading in the right direction. We are formulating a company, and we would be thrilled and honored if you would join us in 2018. Now, since we have a website, I would encourage you to bookmark this website and come back here regularly. Like I mentioned before, this is just the first go around on our website. We're going to be building this out dramatically as the months go along here. And so we would encourage you to come back to this website regularly to see what's new, if anything. So remember, every browser is a little bit different about how you bookmark things, but I happen to be using Google Chrome right here, and they have this star icon up here in the upper right if I wanted to bookmark it. Otherwise, if you have a bookmark tool bar like I do in this particular case, another way that you can bookmark things is just grab it by the icon right there in the address bar itself, and you can kind of see that address is moving with me, and then I can just drag it into my toolbar right there itself so I can access it easily. Along with bookmarking that, I would also encourage you to join our email distribution list if you haven't done so already. Now, most of you have already done this. So you don't need to go and do it again if you've already signed up and you're receiving those regular emails from David and I. But for those of you that might be stumbling across this for the very first time, we would encourage you to sign up for our email distribution list as well. And that way you can stay on top of any news that we might have as an organization, and of course, get the market forecast or market outlook types of videos and different things like that as well. One last thing that I would mention is that we also have a Twitter site established for our company now as well. And our Twitter handle is @market_scholars. And so we would love to have you follow us there as well. There'll be a follow button kind of in your right-hand side. Right now, there's only 2 people following us, and we're only following 2 people, and of course, that's David and I. And so you'll know that you need to follow us if you haven't done so already. Nobody else except for David and I has followed our company as of today. And so let's grow those numbers. I want every one of you to go and follow us on Twitter. In fact, I'll probably post the Market Outlook video here on the corporate handle tonight, and then I'll retweet it from my personal one, and that way you guys can easily access the corporate one as well. But I want to reiterate that there is an underscore between Market and Scholars on our Twitter handle. There's somebody else that used to have a name similar to this several years ago that was on Twitter that has the all one word Market Scholars. So we're Market_Scholars, and again, look for that kind of pencil icon with the blue and the orange in the logo right there. So again, thank you so much for joining us in this journey as we put together this company and try to really create something that you're proud of and special here in 2018. With that, I hope you all have a very Merry Christmas, Happy Holidays, and I look forward to joining forces with all of you guys again come January. Take care, everybody. Bye-bye.